Welcome back to Investing Talk Podcast.
Today we're looking at HIMS and HERS. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of HIMS and HERS. When we look at this company, the narrative has fundamentally shifted. For a long time, they were sort of the go-to telehealth brand for, hair loss and skincare, a convenience play, really. Now they are pivoting hard into becoming a major player in serious high-margin chronic health, specifically metabolic conditions. That pivot is the core of the investment thesis today.
That's a massive transition. And, well, you need serious financial muscle to pull off a strategic pivot like that, don't you?
Yeah.
So let's maybe kick things off with the basics. How strong are the fundamentals, especially coming out of that November Q3 2025 report?
Yeah, they are incredibly strong. It signals that the core business is, funding this expansion quite efficiently. The company delivered a significant Q3 beat across the board. Revenue surged, get this, 49% year over year, hitting nearly $600 million.
Okay, wow, 49%. Revenue growth is great, but in telehealth, volume is everything, isn't it? Are they just charging existing customers more, or are they actually bringing in new users? That's key.
No, they are absolutely bringing in new users. The subscriber base grew a very healthy 21% year over year, which means they are approaching almost 2.5 million users now. What's critical here, you see, is that this growth shows their retention strategies are working. Mm-hmm. And the new segments, the GLP-1 focus and women's health, they're successfully driving new acquisition.
That confirms the growth engine is definitely running. But growing this fast,
yeah,
especially when you're entering a complex regulated space like weight loss, they usually chews up margins, right? Did they manage to maintain profitability through all that?
They did. And this is where the efficiency story gets really interesting, actually. They reported adjusted EBITDA of over $78 million in Q3. That's a 53% jump year over year.
53%.
Yeah, that EBITDA figure demonstrates, frankly, exceptional operating efficiency.
But wait, I remember looking at the numbers. The net income figure was quite a bit lower than that $78 million. Mm-hmm. So for you listening, focusing on maybe just the bottom line, why is that gap okay? Or even strategically sound for a high-growth company like HIMS and HERS?
That's a crucial insight, yeah. While net income was nearly $16 million, which is still good, marking continued profitability, that difference really highlights where they're aggressively reinvesting their cash. They are spending heavily on fulfillment, marketing, and most importantly, the necessary infrastructure to scale the new GLP-1 business. We'll talk more about that shortly. Basically, they're prioritizing future high-margin growth over maximizing net income right now.
Okay.
And they have the flexibility to do this because they maintain a strong balance sheet, very low debt.
Gotcha. So the balance sheet gives them the runway, and the core business generates the cash needed. With a foundation that solid, the question shifts from can they afford to grow to what massive new market are they targeting next? Mm-hmm. And the answer obviously is obesity and metabolic health.
Exactly. This is the transformative factor in the current analysis, no question. They are positioning themselves as a dominant provider of GLP-1 treatments. That's the class of metabolic drugs like, Wegovy and Ozempic. And they're not just offering consultations, they've introduced personalized GLP-1 treatment plans.
Yeah, we saw how aggressive they were in Q3, pushing that 6-month Wegovy offer for new customers. That clearly worked as a, let's say, short-term acquisition driver. But the biggest headline from the source material involved a potential relationship, one that could fundamentally change their scale.
Ah, you're talking about the active talks with Novo Nordisk.
Yeah.
Yes. If we connect this to the bigger picture, this is arguably the top short-term catalyst, absolutely. If HIMS and HERS finalizes a partnership to distribute the branded GLP-1 weight loss drugs directly, well, it solves a massive supply chain problem for them.
Let's unpack the implications of that deal, because it really is transformative, isn't it?
Yeah.
Before, they relied on complex, expensive, and frankly, often criticized compounding operations to offer these treatments.
Precisely. Moving away from heavy reliance on compounding to gaining access to branded GLP-1 supply directly from a producer like Novo Nordisk, well, it reduces regulatory risk significantly, it lowers fulfillment complexity, and fundamentally improves their cost structure. Better long-term margins.
Right.
This potential news caused that immediate massive stock surge precisely because the market understood this pivot. They saw the shift from being a sort of compounding risk taker to potentially a reliable distribution partner.
That focus on weight loss is huge, clearly. But successful growth strategies usually require diversification, right? You don't want all your eggs in one basket. Where else are they spending their energy?
Good point. They are intelligently diversifying, I think, by expanding the HERS division. They recently rolled out specialty services focused on menopause and perimenopause. They're aiming for that segment alone to hit, wait for it, $1 billion in revenue.
$1 billion, just for that segment.
Yeah. It's a smart move, capturing a highly underserved, high-value demographic.
And their ambitions aren't just domestic anymore. I noticed the global push seems to be accelerating too.
Absolutely. The sources confirm the completion of the Xavier acquisition. That's a key platform for European telehealth. This is setting the stage for their planned Canadian market entry in 2026 and broader expansion across Europe later. They're building a genuine international footprint now.
You know, the narrative here feels like HIMS and HERS is evolving from just a service provider into more of a technology platform. And the appointment of that former Cruise CTO seems to underline that vision. Like, technology is the glue holding this complex global health delivery model together.
It really does. They are doubling down on using AI and data in personalized care. This integration is crucial for maintaining those low operating costs while expanding treatment options, you see. That aggressive focus on tech. It backs up their very ambitious long-term revenue target. What was it? $6.5 billion?
Wow. Okay, so we've established explosive growth, profitability's there, a potentially transformative catalyst in GLP-1 global ambition. That paints a deeply bullish picture. But if this story is so clear, why isn't the stock trading at, say, $100 already? We have to look at the flip side, introduce some skepticism. What are the major risks here?
Okay, fair point. The primary risk, ironically, stems directly from their expansion strategy. Despite the robust growth, the company itself warned of near-term margin headwinds. And this isn't due to poor management. It's because of necessary, significant investments they have to make right now.
Can you elaborate on those necessary investments? Like, how does scaling up GLP-1 treatments actually translate into margin compression in the short term?
Well, think about it. They are building out massive compounding and fulfillment infrastructure. Think of it like scaling a manufacturing operation under immense time pressure. It requires high capital expenditure, hiring specialized staff, ensuring strict quality controls. They're basically laying down the tracks while the train is moving at full speed. And that means temporary spending pressure that eats into those nice EBITDA numbers before the real payoff is realized down the road.
Okay, that makes sense. Building the machine before it runs at full optimization. Got it.
Yeah.
But let's move to a potentially more concerning risk, investor confidence. If the fundamentals are this strong, why did the stock drop, what was it, 2.5% right after that great Q3 report? That selling by insiders, over 1.4 million shares, isn't that a bright red flag? Doesn't it kind of outweigh the strong metrics?
Look, that insider selling is absolutely a note of caution. Investors cannot ignore it. While insiders often sell shares for perfectly normal reasons like personal diversification. A large volume sale immediately following an earnings beat, especially from key executives, it does suggest that maybe even those closest to the company feel the stock has moved too far too fast. Or perhaps they just have a more cautious outlook on the near-term volatility. It basically tells you to be prudent, despite all the excitement.
And speaking of volatility, this stock is, well, it's a roller coaster, right? What does the risk indicator actually look like?
Oh, the volatility is definitely elevated. The beta for HIMS and HERS sits around 2.25.
2.25.
Yeah. So for listeners, what that means is if the overall stock market, say the S&P 500 moves 1% in either direction, HIMS and HERS tends to move 2.25%. That is a massive swing. Investors need to prepare for that ride. It's definitely a high reward, high risk kind of play.
We also can't ignore the competitive landscape. I mean, telehealth is increasingly crowded, and the big pharmacy benefit managers, the traditional healthcare platforms, they're certainly watching this GLP-1 market very closely.
Competitive pressure is real, yes, no doubt. But HIMS and HERS still maintains a structural advantage, I think, through their direct-to-consumer platform. Their brand strength and that focused niche have delivered industry-leading retention rates and customer lifetime value. That does mitigate some of the threat from the slower-moving healthcare giants.
But
a major move by a massive PBM, for instance, to acquire bulk GLP-1 supply directly. That could still disrupt the market significantly. It's a risk to watch.
Okay, let's shift gears then and look at the technical outlook, because fundamentally the market seems to be betting heavily on these catalysts actually materializing. The price action recently has been incredibly bullish, hasn't it?
Oh, from a purely technical standpoint, the momentum is extremely strong. No question. The stock has roared back from its 52-week low, what was it, $19.15, to recent highs above $47 . That is a substantial move in a relatively short time.
And what are the classic technical signals telling us about that trend? Is it looking healthy?
It is. It's trading healthily above both its 50-day and 200-day moving averages. This classic technical configuration signals a strongly bullish trend. The market is, for now, confirming the fundamentals and pricing in a positive resolution to these near-term catalysts.
What's fascinating here, I think, is the sheer energy driving this move. It's not just institutions, is it? The sources highlighted a massive spike in retail interest right after the Q3 report, and that Novo Nordisk news dropped.
Oh, the market sentiment is explosive. We saw a staggering 1,734% surge in related retail message volume. It's incredible. 1,700%. Wow.
Yeah, retail traders are completely bought into the weight loss narrative here. Now, while that retail frenzy provides incredible energy and liquidity, we really need to see conviction from the big players too, right, for sustained moves.
So where do we look for those signs? Signs of renewed institutional conviction.
We're watching two upcoming event types closely. First, the ETF rebalancing events. Typically in early December 2025, those might increase passive flows into the stock. But more importantly, the major institutional 13F filings. Those come out in January 2026 and will reveal who was buying during Q4. If major funds established large new positions or added significantly, that provides a key stamp of approval.
Okay. But despite this bullish price action and the retail frenzy, how conservative is the analyst community right now? Are they lagging?
Yeah, analyst consensus is quite cautious still. It's leaning hold with a median target around $37.20.
Which is already below the recent high. Exactly. It's below where the stock has recently traded. However, the independent forecasters, who tend to be quicker to price in potential catalysts, they see significant upside potential. Some are projecting targets of $52 or even more if these key partnerships, especially Novo Nordisk, are finalized.
Okay, so let's wrap this up with the immediate investment scorecard, maybe looking out over the next 3 months or so. What critical dates and events should our listeners really have marked on their calendars?
Right. The primary focus has to be the Q4 2025 earnings release. That's scheduled for February 2026. That report absolutely needs to confirm continued double-digit subscriber and revenue acceleration that's needed to justify the current premium valuation.
That makes sense. Got to see the follow-through. But the biggest expected news item is probably outside of the quarterly report schedule, right?
Absolutely. The number one expected catalyst remains the formal announcement or, finalization of that Novo Nordisk partnership. That is the one news item that, when and if it hits, could immediately drive the stock above that, say, 52-dollar resistance level we mentioned.
And we also have the December 2025 holiday consumer report coming out. Could that have an impact?
It could, yeah. It might provide an upside catalyst if it shows really strong consumer telehealth demand continuing through the holidays. That could influence their forward guidance for 2026 positively.
Okay. Anything else on the radar? Rumors, maybe?
Finally, yeah, you have to watch the rumors. Speculation persists about potential buyout interest from larger traditional healthcare platforms. They might be attracted by that highly scalable, low-debt subscriber base HIMS and HERS has built. Also, whispers suggest they might soon offer a semaglutide oral formulation, assuming regulatory approvals come through.
An oral version.
Yeah, that would open up a new, massive, and highly convenient revenue channel for them. Big potential there.
This has been a really fascinating exploration of the transition HIMS and HERS is undergoing. It's clear they're executing their pivot pretty aggressively, moving from that sort of cosmetic convenience brand to a serious metabolic health platform.
It really is a story of high ambition and, so far, strong execution. And it's underpinned by excellent financial health, which is key. But investors just have to balance that enthusiasm against the certainty of volatility here, the risk flagged by that insider selling we talked about, and the temporary margin compression that's required to scale up that new infrastructure.
When looking at HIMS and HERS, the question isn't really whether they are growing anymore, is it? It's more about whether the market has already priced in the sheer scale of their ambition, especially in that GLP-1 space.